Good evening, all. Ira Epstein with your metal market wrap-up. And this wrap-up is for the evening of Monday, the 13th of February, 2023, 5:45 p.m. Central Time. Now, tomorrow's a big day, a big day. Here's what's going to happen tomorrow. We're going to get the new CPI numbers. What do I mean by new? These are the estimates, but they're changing the weighting. They're taking down used car prices. They're kicking up shelter prices. There's other adjustments. They're not going back the way they used to. They've used some data in this, as I understand, in the new weighting formula from 2021 data and 2022. I'm criticizing the Bureau of Labor Statistics. Why not just use all of last year? That would make it a much better report. Well, why are we going back 2 years? This is America. We don't have to do that. We've got the numbers in. They compile these every month. Come on. I didn't get that when I understood it. But if you don't think this is a major report, shame on you. It's going to be one. I spent a lot of time this evening already putting together tonight's written update. And in the update, for those of you that get my full research, and that's for the futures markets full research, where I put out 2 written updates a day, JP Morgan has put out a note to its clients. It's explaining the policy they're going to take on it, how they're going to look at the different numbers, where they think those numbers, if they fall in, how much of a gain, loss, what's going to happen in the stock indices and outside markets. Then Morgan Stanley came out with theirs from their trading team, and we get another set in how they're looking at the markets. Suffice to say, it's an important report tonight. I've got it there. When I finish this, I'll be sending it to everybody. How will I be handling that is the question. Let me explain what my philosophy is. I don't stand on a train track waiting for the train to come down, and then I can jump on that bullet train just in time. I don't have any positions right now in the futures markets. My clients got out last week and we had a good week. Pretty much the same for ETFs, by the way. Had a nice trade period. So now I'm waiting for this new set to kick in. And after that, we get PPI this week, but it's not CPI. CPI is going to be the big boy. And because of the reweighting, that's it. How the traders anticipate it, what they think will happen all of a sudden in the curve yield, it's going to react to this. It may be a nothing report. It may be a monster of a report. The fact that it's being revised in weightings tells me, I think you stand back, you see what it comes out, see what everybody does, and then you pick up the pieces. Because in the first 5 minutes of trade, you can't match the algorithms. They're going to be all over this report. And you could be right, wrong, in, out. It's going to be crazy for a few minutes. I let the thing die down. Then I try to understand what went on. Then I look at the chart action, and then I act. That's going to be the process. I've got this finely tuned, and I'm very comfortable with what I do with that. Now, you know that we've had a heck of a rally going on in the stock market. Every break that looks bad, the moment anything even wobbles, the bulls come in again and they go, we can take this higher. Today was another example. The market put in a lot of bids. Did it change the chart patterns on things? Not that much. The dollar index has been key to what's going on. Gold has certainly, and silver, been hurt by this. What's happened in China is there's not been the buying after the lunar holiday. The Hong Kong dollar has come under severe selling pressure, by the way, with that. And you see copper's not sitting here in the 440s, 450 area. It's back to the $4 area a pound. That gives you an idea what's there. On the energy markets, very stable in Brent in the mid-80s. OPEC has told you they're not going to make up the difference from the lost Russian oil. The good news is it appears that Secretary Blinken and his counterpart might meet in Munich. There's a security conference, and I think that would benefit the world. The shooting down of everything. Now we've shot down 4 of these objects. That's what they're calling them. They're not alien objects. I want to go on record. They're not alien objects. Do I know? I don't know, but I don't think they're alien objects. But I do think that the reason they're getting shot down is, number one, fear at first. Number two, the outrage the public saw with that balloon hanging over the air. And now they'll say they're in airspace and therefore they've got to come down. Now, Are they necessarily China's? Not necessarily at all. They could be space projects. We don't know what they are. But as you shoot them down, you capture them, you dissect what you've got, you give them back shredded up to the Chinese ideally, and they can reconstruct from the shredding whatever they want to do. We'll have reverse engineered everything we possibly can. And like everything else, it's time to stop sending these balloons over everybody's nations. Maybe that's the right thing to do, and the world's a better place to live, right? I didn't know balloons were regularly coming. China says that we sent in 2022 10 across their country. I have no idea if it's true, not true. Here's all I know. We have pictures of the one over our territory. That, I believe, are balloons. All right. When you come to the gold market, we've been in something of a corrective zone. The market has come down from over the 1900 level, as you can see, into the 1851 level. As I keep pointing out, if it wants to continue to break, the magnet price would be wherever the 18-week moving average is as the zone for support. The word is the zone. You can see how you keep breaking down here, and in the process, you have lower highs, lower lows. That's bearish. The market is now underneath the 18-day moving average of closes. As I pointed out last week, if it's going to be a magnet on the downside, wherever the 200-day average comes in and the 100 are price supports. The fact that the 200's above the market is what you look at. But look at the Bollinger Band. The algorithm will be typically the first main support. It's hit it a bunch of times and just keeps riding it, so to speak. It's not a gorilla glue trade. It's not sitting on it and driving prices lower, but you could get an embedded reading. What happens with embedded? The two numbers that make up a slow stochastic number, and I know my numbers look different than yours. I change the formula in it, and I give this formula to all my people that have joined me in my subscriptions. So all they do is write me, and they get it right away, and it's, oh, wow, now I got it working like that. And it's not the how many weights, the typical front face of Bollinger Bands. You got to go into the formula. But in any case, you can't count tonight because we don't know how tomorrow's going to close. But I certainly can count Monday's action. Both numbers were under 20. Both were under 20 on Friday. And on Thursday, they were not. Tomorrow's a key day. Duh. It's CPI day. So it's going to be a rock and roll day. Now, if it embeds, you know what I'm going to do then. Then I think you're going to make this number. If we get a surprise and the dollar comes down and gold rallies, well, this has been a nice correction. Maybe we'll get a bounce to another number down the road, but there won't be much to do unless it embeds. In the gold silver, okay, starting to get a little wobble in the price, not just pointing up where it continues to lose ground, and you can see why. What happened in March silver, and I do want to move over to the May, but the volume hasn't moved there yet. It's not that I don't want to make the move, it just hasn't moved yet. I'm looking at it every day. When I look at this, it hit the 100-day average. Now, I teach that the combination of hitting a Bollinger Band and one of the major moving averages will be one of the first spots traders take money off the table. Often all of it if you're not embedded. But if you're embedded, you treat it differently. Are we embedded? Let's look here. You cannot count Monday night, which is Tuesday trade. So here's Monday's finish of the close. Here is Friday. Do you think we embedded? I do. There you are on Thursday. And let's even go to Wednesday. So you've had a series of days where you're under. Until the red line closes over 21, I contend that the market will be aggressively sold on a good bounce. Now, there's a way to do it. There's a number that I teach in my course. If you've taken the Enhanced Bollinger Band course, it'll all come in there. So I've got my pencil sharpened. I got my fingers ready to go. But I won't put out a trade recommendation. I'll share this with you until I see that report at 7:30 in the morning. Then I'll crack my knuckles and say, okay, is this worth a trade? That's what I'll do. The reason is, I'm not going to stand on that train track and get run over. You can't beat the initial reaction on major reports, and it is a big report. Treat it as one because it's a new weighting that the Bureau of Labor Statistics, BLS, is going to work with it. This is the new method. It's the first report we're getting like it. Is it going to be hotter? Is it going to be colder? I don't have the slightest idea. I've read all the bankers. I've read the analyst reports that our economists, everybody's pretty much in the same shoe. They know the new weighting. That came out on Friday. We don't know what it did to the numbers. And I'm real bothered that they still are using 2021 numbers. Why don't they just grab all 2022? Now we'd have something that's so much better. In any case, this is an area for some short covering. Some. I contend that the pros are still going to ride this through, that report, if that's what they do. Ira hates that. I always speak like I'm a third person. Lower high, lower low, still bearish. And until China comes alive, what do? As I said earlier, the Hong Kong dollar has been under assault. The Hong Kong Monetary Authority, basically the equivalent of a local central bank, has stepped into the market again to support that. If China gets a turnaround, they won't need to support it. But without it, no, it's become a popular trade to bet against it. I was the first guy there saying, if you don't hear things about COVID and they don't talk about numbers, that means they got a bad case of COVID there. And you'll probably see that they're not buying copper, oil, things of that nature. They don't need it just yet. That seems to be what the case is. In the platinum, you keep riding the lower Bollinger Band. Now, what happened here is I teach that normally you will get to the first part of, let's take it the 100-day average. And let me take this back for you and show you what I mean. So here we are with the market. Are we embedded? Let's you and I take a look. Let's learn something here. You learned this in my course, but I'll review it once because I feel generous tonight. You've got both numbers. I'm going to take you right here. Not there. Day one of embedding, both under 20, under 20, under 20. So now, down here is the first spot that traders are covering shorts. Because it's embedded, if they got out of everything there because it wasn't embedded when it first hit it, then they're looking. They're just saying, well, I'm going to hang in. I'll sell a rally if it comes about. If it doesn't, the market may want to drift to the next support zone if this can't support the market. And as you can see, you can't argue with me that that's 4 days in a row. You're fighting at the 100-day, and there's 5 days in a row, and the Bollinger Band. If it gives ground, you're probably going to 950, 90. Oh, there you are. I think the pros are out up here. I don't think they're there. That's just my take on it. But the trend is clearly bearish. It's embedded. So now what does Ira do? Ira's waiting for sell signal on a good bounce. Would I step in front of that train coming down the track? No. Afterwards, I'll take a hard look. In the palladium market, oversold, hit the Bollinger Band after each time you hit the 18-day average. Now, think of the 18-day average of close as the red line like this. You're playing... do you remember pinball? You ever play it? It's ball to do it. If you had the old pinball machines, they're fun because you got the real ball. But I've played often the electronic ones, and they're a ball too. But if you move them around, there's a tilt button. Well, tilt's a reset. That's how you start the game again. Think of when you hit the 18-day average, you've reset everything on the chart again. And by that, I mean, if you were bearish and you covered, you can be bearish again at that number, looking for the numbers to keep resetting until they don't do it anymore. That's what I see there. In the dollar index, interesting, very interesting here. Let me show you something. We have an outside day, and it's to the downside. If you take out this day's high, which you do right here, my theory is before you go back under this low, you're going to hit the upper Bollinger Band wherever it's at. Still hasn't done it. We'll see if it makes that play. So those are the things that at least I look for in the market. Now, I cover all this in phenomenal detail in the mornings for you. I start, so you'll know, at 5:15 now or so in the morning, and I go through all the futures markets, what's going on in Europe, Asia, bring you up to date, and then we start talking about what to do in the futures. But instead of just talking like this, I bring out a chart and I dissect it looking for the trade with you. If I have a trade, I already know it. I reviewed the chart and I start putting it together, and I'll give you often daily and weekly, show you what they're looking like, why the trade looks presentable, what's the dollar risk approximate with it, what's the event that would take you out of the trade, and where's the profit objectives. You don't have to take the trade. Who else is doing that though? I get market letters. I want you to buy it here. I want you to sell it there. Why? Fundamental chart, you don't need a chart. Fundamentals, fine. But if you're a chartist, why aren't you teaching the people what you see, the exact conclusion you reached, and why? And that's what I do in real time. Now you get to see it and you get to follow it. Now think about it. Here you are, you can grab on our website at any point, and you grab a scroll bar and it'll light up and say, I'm in currencies, I'm in the interest rate area, I'm in the stock area from Ira. And yes, I rotate all the time for you, so you're getting a complete picture all the time as to what's going on, how to get involved with the trade, what are the dollar risks with it, and you get to see that come. I don't know of many people that do that. I'm really sticking my neck out every day for my subscribers. I had one fellow today, a nice guy, write me on YouTube, oh, you don't commit yourself. You're right. I don't here. I do where it belongs. There's another reason, and let me share that with you. The government says that if I put out buy here, sell there, I got to put on every one of those a full disclaimer. I'm not willing to do that. It'll take me hours to do that. And number two, this is how I make my living. People want to ride and follow what I'm saying. If you don't, you don't have to. But that's where I do it. Now, believe me, I stick my neck out and I make you a promise. I get wrong. I make you a promise. I get right. I make you a promise. There's a complete entry, exit, objectives, stop orders on just about everything we do, be it a stop on a close, be it a stop basis this. It's there. A trailing stop. They'll be there. So if you're interested in doing that, all you need to do is go to our website, iraepstein.com, under the word research. It's all waiting for you. I want you to join me. Can I be any clearer? Go to the top up here, do it. Is there a better time than tonight to do this? No. Why? Because we're going to be all over these markets tomorrow in a massive way. I'm Ira Epstein. You have a good evening. I can't wait for tomorrow. Take care.